Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to review what to do once we paid off all our debt. So if you look at this spreadsheet right here, we actually went through a velocity banking scenario of someone who make really good income, right? A really decent income, but is so much in debt that after all of our expenses, we only have $186 left in our savings account. So I don't know about you, but if I were in that situation, I'd be sweating, right? I'm like, oh, what are we going to do? But with using Velocity Banking, we're able to show that we're going to be able to pay off all this debt, $93,000 of debt in about 32 months. And if you want to see the actual video where we did that, I'm going to put a link down below. But here in this video, we're going to discuss what's going to happen, what to do after we pay off all our debt, right? And here's the thing, maybe you're at a point where you've paid off all your debt and the mortgage is the only thing that we have to pay off now. So now you're going to have to decide, okay, well, if I pay off my own mortgage, what happens? I just simply have one less debt, right? And so you can either decide if you're going to get a rental property or just pay off your own mortgage. And if you get a rental property and pay off the rental property's mortgage, guess what happens? You basically have infinite income for life, assuming that you have a good tenant in your property, right? Whereas if you pay off your own mortgage of your own personal home, you just have one less debt, okay? Now, having one less debt is absolutely beautiful, but having infinite income for life, maybe we want to focus on that. Or we could just do it, one step at a time. We pay off our mortgage first, and then we get the rental property. Now, let's assume at this point that we're just going to not pay off our mortgage, all right? And we're going to buy a rental property, okay? And one of the things that you're going to hear a lot when we talk about real estate is that you always want to buy a rental property or real estate at a discount because that's how you create immediate wealth, right? So let's assume that we live in an area where the homes are $300,000, and the reason I talk about this is because I'm doing this right now, and we got that home at a $200,000 price. So assuming that you got a $100,000 discount, and some of you might think, wow, that's impossible. How do you do that? The answer is that you have to go out of your way to find people who are in distress, and there's a good number of people, I'm not saying everybody, who are going to trade equity for a peace of mind. And so if you can help these people out, and you both of you benefit, then you're able to find a discounted property, right? And so let's assume that we got a $200,000 loan on a $300,000 property, create immediate wealth in an instant, and we want to go ahead and pay this off quickly. Let's figure it out. And we have this cheat sheet calculator right here, provided by Renatus. And if you don't know what Renatus is, it's an educational company. They have communities all over the nation. I am part of Renatus. In fact, I'm an independent contracted marketer, which means that I'm independently affiliated with them. I promote them, and if you decide to register through me for Renatus classes, then I get a little bit of commission for sharing what they provide. And they also provide this calculator too if you're part of our group or the community or whatever, right? So here's the thing. So let's say that we have a $200,000 loan, right? And what we're going to do is just put in our information in here, okay? And let's go ahead and do this. So what are our expenses right now? Our expenses is 3191.1. So let me just go ahead and do that. Okay, and let me take away this dollar sign and this comma. Okay, and what is our monthly income? So let's go ahead and calculate that. So right now it's 6,500. So let's just do this 6,500. But here's the thing, right? It's not just 6,500 because we have to include the tenant's income, right? So this is our own personal income. And then maybe let's say we bought our first rental property, and the monthly rate of rental rates in the area where we bought it is about $2,000 a month, right? Seems reasonable for a $300,000 area. Even though I'm visiting California right now, sometimes you might have to pay a lot of money and not even get a bang for your buck because a property here in California actually costs $1 million, like, or Southern California, 3 bed, 2 bath. And you know how much you get in rental income for that? Only 4 grand, right? So why not buy $200,000 to get that 4 grand rather than $1 million in Southern California? So you really have to think about your rate of return. But let's just assume that the rental income is about $2,000 gross, right? So if we account for expenses, an easy uneducated form that you can use is just say, hey, 70% expenses, or 30% of that that income goes to expenses like taxes, insurance, and all that, and maintenance. And what we're going to do is say we have $10,900 of income every single month. Okay. And so now, let's take a look at this. How long does it take to pay off this rental property loan? Only 4.3 years, right? And so if you pay this off, right, look at all the interest that we save. So one of the things that people don't really think about is that if they don't pay off their rental property loans quickly, how much interest is going to the bank? Because take a look at this. If you have, let's say you theoretically have a tenant who pays for 30 years, right? No late pays, no nothing. You're actually having the tenant not pay you. You're having the tenant pay $328,000 to the bank. And all you got to do is keep the equity. So the tenant pays the interest, you get to keep the equity, and I don't know about you, but if I'm a landlord and I'm going to have a rental property, I don't want to have the bank get most of the funds from the tenant. I want to get most of the funds, right? So if we do this and pay it off in 4.3 years, yes, we give a little bit somewhat to the bank in interest, but at least I'm not giving it $328,000, right? And so here, the interest that we potentially save is about $290,000, um, by doing velocity banking. And here's the cool thing. So once we pay off, right? Once we pay off this loan, we could get our second rental property. So I'll say another $2,000, same type of house, $300,000 property with $200,000 loan, right? Because we got a $100,000 discount. And you say, is that even possible? Well, I did that. So I have other videos where I show how I did that. But let's just assume that we do this, right? Take a look at the next house. Let's assume we get the next house. How long is it going to take? 3.1 years. So every house that's paid off has essentially a snowball effect. And then once we have the third house, right? Let's say we get another third house at that price. So let's just do this plus $2,000 plus 0.7. Okay. And let me actually just do this 12,000. Okay. Yeah. So let me put a bigger chunk amount. Okay. So take a look at this. Now you'll notice that the third house only takes about 2.5 years to pay off, right? And so we're gonna have like a portfolio of three paid off houses in about, let me see, 2, 3, 4. So 2 plus 3 plus 4. How much is that? I can't even do math in my head. 2 plus 3 is 5. So about 10 years, right? 10 years, we're gonna have a portfolio of three paid off houses, and that can essentially almost be like a retirement, right? Because let's say like we get sick of dealing with real estate, we hate tenants. Guess what? We have so much equity that if we sell off the houses, that's going to be like $900,000 of equity. Hopefully you might have some tax saving strategies so you don't have to pay a ton of capital gain. I don't know. I'm not a tax advisor or anything like that. But again, even if let's just say I wanted a quick payout, then I just sell all three of my homes. Whereas if I wanted that infinite stream of income, then yes, I'd have to be a landlord for the rest of my life. But instead of paying a 30-year mortgage into 30 years, who doesn't want to create wealth, right? So that's what I'm talking about. So again, and then once we have all that income, let's just do this, right? So maybe how much do we have here? We have $10,700 of income, right? And then we're going to have like extreme cash flow, and then we could just simply use that to pay off our, personal mortgage, and that'll be like the final debt. And then we have like extreme income, right? So, or extreme cash flow, right? So it's not just one extreme, it's two extremes. Okay. So just wanted to throw that out there as a discussion of all the possibilities. I know so many of you are thinking of just your own personal debts, but once you've done that, what's the next step, right? And it's not your fault that you're just thinking about your personal debts, just because so many of us are at the edge living paycheck to paycheck because of all of our debts. And that's one of the reasons why, Dave Ramsey is so popular, because so many people are just struggling with that, right? So is this your plan? Because I'm doing this right now. I'm doing this with my first rental property, and I'm not one of those people who are going to buy like 10 rental properties at a time, or at least with single family homes. I might buy a multifamily or maybe some what do you call it, mobile homes in the future. But if I'm just doing single family, I just want to do one renter at a time, just because in my experience, like finding the tenant was like the most toughest thing. And if I have like 10 rental houses and I have to find 10 tenants for them, I think I'll just go a little bit crazy. So I'm just taking a little bit slow, and then maybe within a couple of years, I'll build that portfolio of just a few houses. You don't need that much, just a few houses, and then you're good. You've multiplied your income, and if you selected a tenant right, then it's going to be a passive experience. Okay. All right. So this is a Korean Atlanta mentorship. If you're interested in joining our group, go ahead and click the link below. Other than that, I'm going to put a link to the other video where I discuss how we paid off this debt. And if you have any questions, leave a comment below. Other than that, have a great day.